Welcome to the Northern Business Podcast. Each week we'll be talking to people active in business and the economy about the big issues driving growth in the north of England. We're sponsored by Virtue Motors, one of the UK's largest motor retailers. Check out its website at virtuemotors.com. I'm Graham Robb, owner of Recognition PR. We help scores of businesses promote their products and services. Some are featured on this podcast. Make sure you never miss an episode by subscribing on YouTube or wherever you get your podcasts. In the studio this week, we have Jason Oakes, Sales Director of 0800 Repair and Oakes Energy Services. And down the line, we have Jack Sutcliffe, CEO and co-founder of Power Sheds, which was named in the Sunday Times fastest growing businesses this summer. And down the line and starting the programme, we've Julian Jessop, an independent economist with more than 5 years of experience gained in the public sector, the city and consultancy. He also writes for the Financial Times, the Telegraph, and he's a regular contributor on TV. So, Julian, we're going to start with you first. Welcome to the podcast and Northern Business Podcast. Tell me, as we come out of the summer, do you feel that there are any successes that are likely to be achieved by the government in its big economic targets?
Well, as far as the economic targets are concerned, the numbers set by Rishi Sunak at the beginning of the year will probably just about be met, but I don't think he's going to get an enormous amount of credit for that, nor would he deserve it. Their big headline target was to halve the rate of inflation, which I think will be achieved just about, but it's very difficult to point to anything that the government itself has done to deliver that. It's basically inflation is falling because the global economy is slowing, commodity prices are coming down, and in particular, the Bank of England has ramped up interest rates and slowed the economy and reduced inflation that way. He's also set a target to grow the economy. The economy is just about growing, but that's not much of an achievement after the deep recession we went through during COVID. So, again, he'll hit that, but so what? And finally, he set a target to, get public debt falling as a share of national income. But to be honest, I don't think people really care about that. It doesn't really cut through with voters, and it's a sort of target that you can fudge to hit if you wanted to anyway. So I think he probably will hit his economic targets, but I'm not expecting him to get any political credit for that.
Well, I'm going to the full economy in a minute, but on the politics, I know that where you stand with Rishi Sunak and so on, but he could have been less disciplined on public sector pay, couldn't he? That would have been difficult if he'd given in on public sector pay. That would have been inflation.
Well, of course, I think he's actually been quite sensible there. I think it was important to give public sector workers something. That's not just me being a softy liberal here. The key point is that there are big recruitment and retention problems in the public sector, just as there are in the private sector. So I think a private sector employer in a similar position would have done exactly the same thing. But don't forget that some strikes are continuing in the public sector. So senior doctors are on strike again, and one of the reasons why we've had some weaker economic data, particularly the latest set of GDP numbers. So the total amount of goods and services produced in the economy, is that significant parts of the public sector is still on strike. So I think it's too soon to sound the all clear there either.
Okay, well, let's do a bit of a data grab. There's been quite a lot over the summer. Maybe people have been on holiday, not fully appreciated where we are. In your order of priority, what would you say the key data that's come out over summer is?
Well, first of all, looking backwards, the good news is that the economy wasn't as weak as we thought over the last few years. So there was a big revision to the headline numbers for the size of the economy. Previously, we had thought that the economy was only just returning to the same size it was before COVID struck. Now we realise that level was actually reached about 18 months ago, so 18 months earlier than we previously thought. And in particular, that means that the UK is no longer the sort of big outlier amongst the major economies that we thought. So a lot of people are saying that the UK, or Brexit Britain, if you like to use that term, was lagging behind other major economies. The new data suggests we're actually roughly in the middle of the pack in Europe. We're still well behind the US, but we're up there with Germany and France and Italy. So that's the good news. The bad news is that the economy does seem to be losing a lot of momentum over the summer. So a lot of businesses surveys suggest that we're slipping into a potential contraction in the third quarter of the year. And if that were followed by another contraction in the fourth quarter, which is certainly possible, then we're talking about what economists would call a recession. And the main reason for that is obvious. So, the impact of the big increases in interest rates we've had over the last year or so, these do take time to feed through into the economy. So, some people are only now, for example, seeing their mortgage rates go up. But they're going to face a big hit as they try and refix, going to prove to be much higher rates. So the next sort of 3 to 6 months are going to be pretty tricky. Looking further ahead, though, I'm a little bit more optimistic. I think that inflation will fall a bit more sharply over the rest of the year than most people think. That will take some of the pressure off the Bank of England to keep raising interest rates. So although I think it's far too soon to be talking about interest rate cuts, at least they may not rise as far as some people feared, and I think that will provide a bit of relief.
Okay,
but there are lots of headwinds out there. Slowdown in the labour market, some commodity prices, particularly energy, are ticking up again. The government seems determined to raise taxes further rather than cut them. So it's going to be a pretty difficult time, both for many households, but also many businesses too.
Well, let's take a couple of those bits of data. You talk about the latest data on growth, which was the month of July, which saw a really quite significant drop in growth. And can people believe it, given that within a week of that published a week before, they were revising something by upwards of 2%?
Yeah, I certainly, I'd always take any official numbers with a pinch of salt. In particular, the monthly GDP numbers are actually a relatively new invention. And they are pretty volatile. So, it's not unusual to get up 0.5 and then down 0.5 the following month. And on top of that, they're frequently revised as well. So I wouldn't put too much weight on those numbers alone. But the key point is they're consistent with what we're seeing in other indicators. So as I say, the business surveys, recruitment surveys, they all suggest that, things have been getting stickier over the summer. And those numbers, the surveys, are arguably more useful because often they're more up to date. So the figures we had today were official data for July, but we've already got surveys, business surveys for August, and even some early data for September that suggest that things are continuing to slide.
That's right. And when you look at the most recent unemployment figures, those figures don't tell a good story either for the north of England, the northwest and the northeast among the highest again. And I'm in the northeast, and as I've said on this podcast before, most of my working life we've been above the national average, but really high, maybe 10%. It's come significantly down in the 5% region, but the last few months below national average, unheard of. Last month, it tripped by 1%.
That is worrying. That is worrying. I mean, so far the labour market has been one of the strong points in the economy, and that's not necessarily unambiguously good news. So if you're a business looking to recruit, then labour shortages and higher wage costs are a problem. It's certainly something that's worried the Bank of England as well, because they think that there is a risk of what they call a wage price spiral, where companies have to pay more for workers and therefore raise the prices they're charging their own customers, and then that feeds into bigger wage increases and further price rises too. So a strong labour market isn't unambiguously good news, but I'd rather have a strong labour market than a weak one.
Yeah.
What we're seeing now, though, is signs that the labour market is starting to turn. And that's worrying because the labour market is often the last part of the economy to turn. So it's what I call a lagging indicator. And so the fact that the labour market is now weakening reinforces the signals we're getting from everything else in the economy that the next 6 months or so are going to be pretty tough.
Now, you're not of the school of thought that if it's not hurting, it's not working. You don't believe that is necessarily the right approach, do you?
Well, the point is it is already hurting. So we had a period a couple of years ago when there's a lot of monetary stimulus in the economy, by which I mean interest rates were very low. And the Bank of England was also printing lots of money and pumping it into the economy through the policy known as quantitative easing. So that's buying government bonds and injecting cash that way. So monetary policy had been very loose, but over the last year or so, it's been tightened significantly. And that is a key reason why the economy has slowed. I think actually also it's a key reason why inflation has started to fall. I think part of the problem at the Bank of England is that they tend to look at the wrong numbers and they're always looking backwards. So they might be looking at the most recent set of inflation numbers or the most recent set of labour market data. But if you step back a bit and look at the big trends in the economy, that sharp slowdown in monetary growth, meaning the tap of cheap money that had fueled inflation, that has now been turned off. Now, that is potentially a big warning sign for the economy. So hopefully the main way we'll see that come through is a very sharp fall in inflation.
All right, now let's talk about inflation and interest rates. Next week, 20th and 21st, very important for the economy. Anyone in business watching or listening to this will know that inflation figures are going to be out and the new interest rate will be established, whether it stays the same, goes down or goes up. So let's talk about those two things in sequence. Inflation first. What's your thoughts on it? An educated guess, I suppose.
Yeah, well, I think inflation will probably tick up a little bit, maybe 7 or 7.2%. But I think that's now widely expected. The Bank of England has been forecasting this. The Treasury has been talking about it a lot. And there are a number of things I think you reasonably call special factors behind that. So you've had the pickup in motor fuel prices. You've had an increase in alcohol duties. And there's some sort of unfavourable base effects, as they're called, in the annual comparison. So some prices were relatively weak a year ago. So they're picking up a little bit now, and I'll make the year-on-year comparison but worse than what otherwise have been. So I think a slight pickup in inflation shouldn't worry people too much, and certainly shouldn't worry the Bank of England too much. But we're probably getting a similar story in September. Obviously, global energy prices continuing to rise. So the September numbers will probably be a bit sticky and above 7% as well. But then in October, we're going to get hopefully a very big fall as the impact of the new Ofgem cap on domestic energy bills comes through. So even if we get a 7% print for August, another 7% print for September, I still think we're on track to be at 5% or below by the end of the year, which is the sort of number that the Chancellor was talking about. And certainly a 7% number next week, I don't think on its own will be enough to rattle the Bank of England too much.
Now, when it comes to how that affects interest rates, you say it won't rattle the Bank of England. I know people in business, and we've got shadow MPCs that I'm involved with in the north of England, that want a pause in interest rates. They want the Bank of England to just say, well, all right, let's just see how it's going. It's not irrational to put a bit of medicine into the system and then just see if it's worked.
Yeah, but I think that's absolutely right. I'm on another shadow monetary policy committee down south, and we've actually been arguing that rates should be left on hold for several months now. And interestingly, there have been one or two members of the real monetary policy committee who have agreed with us. I think the most likely outcome next week is that the Bank of England will raise rates by another quarter point, taking them to 5.5%. But two caveats around that. One is, I think that might actually be a closer call than many people expect. I think that there might be a couple more people joining the minority in voting for no change. But the other point, I think even actually more important, is what the Bank of England says about where rates might be going after that. So if they're able to signal that the move next week is going to be the last for a while, then that actually could be quite significant. It might mean that the markets start to revise down their expectations of where interest rates are going. And that in turn could actually be reflected in a fall in fixed rate mortgages and in borrowing costs for the government and for many companies as well. So it's not just what they do next week on interest rates, but also what they say about where interest rates are heading. And I think there's a very strong case for them to effectively signal, one more and done. They feel 5.5 is enough for now. Too soon to be talking about cuts, but we can expect rates to stabilise 5.5 now for quite a long period of time. And I think for many people that will be seen as good news.
Julian, we've had a good outing on this. Thank you very much for your expertise. We'll come back to you as we finish, but let's talk to our other two guests who run businesses and are more productive than you and I in the economy, I suppose, from that point of view. Jack Sutcliffe, down the line from Bradford, Power Sheds. Tell us about your business. You're fast growing. This is what it says in the Sunday Times, fastest growing businesses in the country, and you're one of them. What do you do?
So yeah, we're a fairly new company, really. We're just 4 years old, and there were two of us, myself and a colleague Simon, who leased a small factory in Bradford 4 years ago. And the two of us would make sheds. We sold, I think, 14 sheds on eBay. We're Simon and I would manufacture them, we'd paint them, we'd pack them, and we'd send them. And within a year, we're up to 300 sheds a week with 36 members of staff. We had to move from that premises to a much larger premises. With the following year, we got up to 80 members of staff producing 700 sheds a week. So we've grown quite quickly over a short space of time, which has led to being put into the Sunday Times fastest 100.
Well, congratulations on that. Let's introduce Jason Oakes, 0800 Repair, and you also run a business called Oakes Energy. What's 0800 Repair do?
0800 Repair offer a number of services through householders and social housing side of things, with installation measures, renewable technologies and air source heat pumps, power generation, that's PV, and battery storage.
So you go into houses, give them new energy systems and give them new heating systems?
Yeah, absolutely. So we go in and assess the building, depending on the age, and we improve the fabric of that building. So then we install air source heat pump, then, that'll deliver all the heating requirements, then a bit of PV to hopefully contribute to running that heat pump.
Well, let's ask you the question, both of you, the same question that everyone in business always asks: how's it going? How is it going? Julian wants to know that. He's an economist. How's it going, Jason? How's it going, Jack? You first, Jason.
Well, business is not showing any signs of slowing down at the minute. We're doing very well. We're in a funny sector because we work for the government as well, so it's fuel poverty side of things as well. So we are always looking to improve the living environment of people that are in the fuel poverty side of things.
And Jack, how's it going with you? I looked at your prices of your sheds on your website; they look relatively competitive.
Yeah, I mean, in a tough market when it's interest rates are high and people need extra space or extra storage and they can't afford to move or they can't afford a bigger house, they go for a shed or a log cabin as a suitable alternative. So the industry that we're in doesn't overly suffer too much in a difficult economy.
And I suppose it is still a bit price sensitive, though. I mean, I was looking. You're around 400 starting point on your price point for your cheapest shed, but you do ship them to people as well, don't on a pallet.
Yeah, I mean, you found that timber prices have increased that much over the past sort of 3 or 4 years that shed prices have effectively doubled, and sheds have now become a much more considered purchase. So maybe a couple of years ago you'd buy the cheapest shed that you'd buy, but now when you're spending £700-800 on an 8 foot by 6 foot shed, you do your homework, you look at the reviews, and you try and pick a shed that's going to last. So you have got the market there that's still looking for a good quality shed, and those where they need some extra storage, who need something a lot cheaper, will pick something that we don't really offer, which is a cheap, thinner material shed which doesn't last as long, but
which will rot from the ground up. I know, I've got one in my garden. It's not lasted nearly long enough. Now, talk to me about things like, you as a new business, you have to get into the buzzwords of life, don't you? Sustainability and equality and things like that. And I notice you have got some good policies on this, particularly on where you get the wood. And
yeah, that's right. We were partially acquired with by a large company called BSW Group last year, and they BSW, part of their rebrand stands for Building Sustainable Worlds, and they own 50% of Power Sheds, and they're now our key supplier. The timber's all sustainable from responsible forests. We plant 3 trees for every one that we cut down. The shed is sent on a recycled pallet, package free. So it's very much a part of what we do and what we're selling. Also, it's very important for some of our key partners. So we sell on companies such as Wicks and Travis Perkins, and it's important for them as well that we do our part in that side of things.
How easy is it for you as a business, each of you, I'll ask you both this question, to find the investment? Because I know both of you have got large partners involved in different elements of your business. When it comes to the things that you need, the factory units, the new equipment, the electronic IT, point of sale material and so on, all that needs funding. You're a newer business. How did you manage to fund it?
So Simon and I self-funded it. We saved up a little bit of money, leased that small factory, got some second-hand machinery, And because sort of 50% of our business is online and we get money up front, we've used that cash to generate the investment. So we haven't needed any investment loans, funding to get us to the stage that we're at this moment.
You've got any EDRF funding, EDRF support on your website, though?
Yeah, we do. We've had small grants from things like the Adventure Programme, who's match funded some of the machinery that we've had. So we've had some support from Adventure, which has been really well received.
Sounds like proper Yorkshire thrift has done this.
Yeah, we're quite tight as frugal potentially.
Quite right. What about you? What about funding your new products? Because they're expensive products. Unfortunately, some of them have to be imported as well, don't they?
Yeah, absolutely. We're a very established business, so we stand on our two feet effectively. Our investors are global, a global well-known brand, but they looked at us as a potential acquisition. Unfortunately, they invested into that. The business is booming. We're doing really well within the sector as a leading renewable installer in the gas and sustainability side of things. So we're very fortunate on that side to have a good business.
Now, your business model, Jason, obviously you're selling a product that's getting a bit of a bad rap. This is the air source heat pumps. Now, what are you saying to customers about the extra cost and the inconvenience and how the efficacy of an air source heat pump is different to central heating? How are you getting people over the line on this?
Yeah, well, I've been installing heat pumps for 15 years and designing them personally. They get a bad name because the dynamics of how you design a system probably is incorrect. So as long as you get them fundamental things, and we're governed by MCS, so if the regulations are in place, then the heat pump will work. Unfortunately, electricity is expensive, so we complement that by the power generation side of things with PV and batteries. So we store that bit of electricity to contribute to running on your property, your demand on your property, and what that needs.
When you put a heat pump in, you do have to consider reinstating your house if it's a certain age, don't you?
Yeah, absolutely. So we go in and we do full heat loss of fabric improvements on the building if it's required. That's internal wall insulation or external wall insulation, or if it's got a cavity, we'll blow insulation in there. Lofts need topping up, so make that box very well insulated so the heat pump, the demand is reduced, therefore it's very efficient to run.
You heard Julian talking about the economy delivering workforce shortages, although there's been some blip in unemployment. How are each of you getting over the workforce issues? Jack first, how are you recruiting your staff?
We're in a good location because we're in just off the M606 in Bradford, next to Leeds, Bradford, Cleckheaton, Halifax, Huddersfield. So we're in a good area. But what we've done is by creating a shed that's modular, we've made it fairly simple to manufacture. So by de-skilling it, when we're recruiting, we don't necessarily need skilled labour. We don't need a joiner. We look for people with the right attitude, looking to progress, to come in, to learn, to be on time, to be there. And then we feel that we can train anybody to make shed panels. So we've actually found recruitment quite successful by adopting that sort of method.
Fantastic. Is that the opposite with you? Because some of this new stuff needs a bit more skill, does it?
Yeah, we've got a lot of internal, highly skilled people for the gas side of things. We did a program probably around about 2.5 years ago where we did a transition from our gas engineers to be able to install renewable technologies such as air source heat pumps and PV and batteries. So we transferred that skill sector over, and also we've got a family basis in we bring employment from the already employed businesses. So we bring them into the business, and they're part of the family as such. So yeah, we have a lot of training in-house, and it works really well.
And you have a little academy, don't you, as well?
Yeah, we've got a little academy that was set up with multiples of different technologies, air source heat pump, ground source, solar thermal, PV, and battery storage. So it's great. We get the engineers down there, and we cross-train them.
Well, thank you, lads. I'm going to ask Julian for a bit of a last word. These are real businesses. I didn't choose them for any other reason that they were doing well. I know them, and they've got a good story to tell. But is there any takeaway from the kind of thing they were saying about their own business activity and the economy as it is now?
Well, a couple of things I took away. That they're both around sort of flexibility. The examples of how you respond to labour market shortages is a really good one. but also flexibility to client demand. So clearly there's a lot more interest in environmentally sound and sustainable products and ways of doing business. And so companies that are flexible and can adapt in terms of recruiting people in a different way, possibly producing products that they know are more highly geared to exactly what it is the market wants, those companies are going to continue to do well, I think, in any business environment.
Well, thank you, Julian. Thank you, Jack. And thank you, Jason. All our contributors had a beginning with a J today, so it was easy for me. Thank you very much indeed. If you'd like to join us as a guest on Northern Business Podcast, I'll be very happy to interview people who represent businesses like we're seeing today. You can tag my colleagues in on LinkedIn. Feel free to get in touch, and we'd love to hear from you. We'll be joined next week by Katie Moss, Managing Director of Trent Refractories, and an innovation and growth specialist, Pat Canvich. But that's it for this edition of the Northern Business Podcast.